Greetings, friends, and welcome to World Financiero Special Edition, this time the episode on real estate and private equity market. Alternative and tax, that's what it's called. Jose Miguel, welcome.
Happy, thank you. Glad to be back for another episode where today, in the month of April, we'll be discussing this topic. Real estate, a lot of information, a lot of movement. We just finished recording an episode, and if you haven't listened to it, please check it out. We talked a bit about the economy, financial data, markets, what we're seeing, how different trends are converging, how this could affect your wallet, your investments, and we even discussed some strategies on how we can handle this situation. But to give a brief summary, at Ferdinand we have data. Economic GDP came out a bit light. We have pretty sticky inflation. We have geopolitical conflicts, situations. Right now, as we're recording, we're close to what's happening in Iran, and the US military. In fact, we didn't mention this in the other episode, but the largest aircraft carrier currently in the US Navy, Ferdinand, was in the Caribbean for the situation with Venezuela. And just a few days ago, the news came out that it's now over in the Middle East. So employment data was also adjusted for the year 25, a revision, and it was quite severe. The new jobs in 25 were modest. There were 181,000 jobs for the whole year according to the latest data. And in fact, you mentioned to me, which is important, Ferdinand, that there are analysts, even some well-known personalities, who are starting to take the information released by the government with a grain of salt, right?
Yes.
A lot of changes, a lot of adjustments, there's no clarity, and so on.
To be perfectly honest, we are certainly not trying to suggest that the data is not extremely important. So let us make that point absolutely clear.
About
the facts, there could be some element, I can't say manipulation, but in a way there isn't complete transparency about what the real numbers are. And doubts are being raised even by several economists about verifying that.
No, and something important and real. We've had government shutdowns quite frequently. This also affects the flow of data, right? Data management gets interrupted during these periods many times. So there really are also situations that have led to some adjustments, some changes. But how are you seeing it? Let's talk a bit about real estate, knowing that your companies are developing, are in the market, you currently have inventory, you're building homes, and basically you're handling the day-to-day. So how are you seeing it? We had an analysis from Michelle Gabelson, who our followers know her. She's over there in Southwest Florida recently with data.
Very interesting.
How about that?
Well, credit goes to the special edition financial game. I sent a memorandum to the association in Southwest Florida saying that the data they had was incorrect, and they confirmed to me that yes, it was incorrect. That the numbers I gave of 6.4 in absorption were the correct ones. Based on the supply and demand numbers, we are at the peak of the data. Bottom line, a lot of activity. There was a 46% increase in closed sales in the month of February, and we are starting the high season. The high season now gains traction in March and April because of the refunds, since now comes the big, beautiful tax bill and the BSR refunds. In fact, I did an analysis on Credit Karma, and my refund this year is supposedly about $3,000 more than I had last year. So those kinds of effects, there must be something there. We'll see, but it looks good. At least the data looks balanced. It looks balanced. There are two good things I see for us in our market and for our investors.
It's important to mention that we're talking specifically about our market, because if you go to CNBC and check and read about the pending home sales for January,
you'll see
that there was a decrease in pending sales that January.
Yes.
But just so you can see what a sample is, let's call it that, right? Diving specifically into a market, but comparing it to national economic data, right? So here we're talking specifically about the Southwest Florida area.
Yes, mainly the area known as Lee County. Lee County is located between Naples, which is Collier County, and Sarasota County, which is Sarasota. So between Sarasota County, that county right there, and Collier, which is named after Sarasota, There's what's called Lee County and Charlotte County, which are a bit more rural, but they're not completely rural either. They're what I call a population of almost 1 million in Lee County. You're looking at 200,000 residents in Cape Coral. You're looking at 500,000 in the Fort Myers area. An article came out stating that of the 3 markets expected to offer the best development investment over the next 5 years, number 1 was Pompano Beach, which is north of Fort Lauderdale. Number 2 was Fort Myers, Cape Coral, in that area. And in fact, the numbers reflect this. Activity increased by a positive 47%. Absorption rates remain stable, 6.3, 6.4. It's a very balanced market, but still favoring the buyer, okay? It still hasn't shifted toward the seller. We're seeing a decrease that confirms the national trend, which is that there is less supply, fewer permits, and a reduction in inventory in Cape Coral has been almost 22%. That's quite a lot. Or,
in other words, less inventory,
higher demand. And that's why you're seeing these kinds of circumstances. Now, for the first time in 8 or 9 years, I'm starting to see the word distress, which I hadn't seen in 8 years. We've received calls from people I hadn't seen in 8 years. We did business and they treated us excellently. In fact, you were at it's one of the situations in Pinellas County with one of the houses we had in distress.
a hearing.
An administrative hearing. For the first time, those people are calling me, look, distress is showing up, good deals are appearing, and I hadn't seen that in a while. In Key Corral, you know it, I'm talking about the phenomenon with the builders. Many builders who have left. With the increase, they couldn't withstand the rise in rates, plus the increase in their lines of credit, plus the extra requirement to put up collateral because there was a price correction in the different markets. So bottom line, it's an active market, a good market. Everything seems like the trend of supply and demand is starting to shift toward the seller, though we're not there yet. And for the first time in 8 years, distress deals are coming up in areas that have seen a big resurgence in the Southwest area. If you've made it this far, it's because you like our content, and we are happy to welcome you on the different platforms.
Follow us on Spotify, share, like, and subscribe to our channel.
What has been noticed, and what I have noticed, and I think you were there last time, is that there are a lot of houses that were started and are now abandoned.
And
that's because they were left halfway done, and that could represent an opportunity. We're still in denial. You know that in the distress cycle, there's what's called denial. No, I'm not going to sell. But as time goes by, prices will have to adjust, because then the foreclosure processes start, the situation begins to unfold, and if we look at the current economic data, it's possible that we could end up in that situation. Now, there's no substitute for a good property at a good price. The gravy, the sweet spot, $3.75, $4.50. That's it. Those always have showings. They always have demand. Inventory over 500,000, and I'm seeing days on market expand to 76 to 80 days.
And that specific price level is actually the FHA loan limit, which many buyers use today. No,
there's no problem with that. FHA in Lee County, the latest number was around $505,000. Right now, many of our homes we call affordable luxury. It would be good for you to visit our website. Eddie Fernandez was with our specialist, Michelle Gables. They recorded a series of videos that I recommend you go and watch. There are some very interesting reels about the types of properties available. I haven't just called it that. Affordable locker.
What are you seeing, Ferdinand, in terms of property financing? How is FHA doing? How are things going?
The government is moving. It's moving quite a bit. Look, here's something interesting. Very good question. I'm seeing 2 things. That's why I'm saying I'm seeing one. What I'm seeing is that things aren't changing drastically. FHA is even lowering the credit requirements. Instead of needing a 630 or 640 score, they're accepting applicants with credit as low as 590. So if you made a small mistake, they're not disqualifying you.
It's the same situation we talked about regarding
credit.
Consumers aren't in such a healthy position, so they have to make some adjustments. And
An interesting fact, in the latest sales in Key Coral, 37% were cash purchases.
Okay.
In other words, it's because the issue in East Florida has been so significant, at least it's extremely high in Miami, that you're seeing people selling in the East and wanting to move to a house. In fact, that's one of the promotions you'll see in the reel that was recorded this week. This would cost you over $800,000 in Miami. Here in Cape Coral, you can get it. The same quality house with a pool for $400,000 to $420,000, half the price. The taxes aren't the same either. The taxes are half, and there's no such thing as that certificate.
Half as well, through and through.
Now from here it's 35 to 45 minutes depending on traffic. If you're in Pampa, you're not here, so it's about 2 hours and 30 minutes from Miami. That's the reality. If you live in Doral, then you're talking about 2 hours and 15 minutes more or less via the 75.
Crossing over there. The swamps of the vast Everglades.
They're in, what's it called again? Alligator Alley.
This is the famous Alligator Alley. And unfortunately, that is exactly where the alligator is currently located.
Ali, so you have this kind of situation. Another situation I'm seeing, Jose, and this is more in the alternative area, is that an article came out and you brought it to me and it's super interesting. It's from Real Assets Advisor magazine. Thank you. From Weissel that I received. And according to the editor, the specific article is titled Playing with Fire. The author was Jeffrey Dorman. He is the CEO and founder of Institutional Real Estate Inc., which is the publisher of real estate assets. Very interesting because in a way he's talking about what we've discussed in the previous episode, which is that not only is the consumer over leveraged, but you're also seeing over leveraged deals. And many of the representations of that dividend are not necessarily because they are realized gains or from sales. It's simply because they're in fronting the money, and that's what he mentions in the article. That it could bring a species, it's not a bubble, but an overvaluation. And that the investor has to have expectations of having what we always offer and what we are always talking about in the confluent codes. 13. Collateral, credit, and core and income and capital appreciation. But it has to come with a form where there is an inventory, where there is control, where there is an asset that is backing up that viability. And what we're seeing is what happened with the SPACs. Remember with the famous SPACs, which were, I had raised capital based on pro formas, on an evaluation, not on something real, not on a real track record, just on a projection. And what this article is saying is that you have to be very careful with what kind of private placement audit they offer you, because it could just be a projection and not the proper process.
That the investment being made has backing, has collateral, and that the asset is actually there. Nowadays, there is a lot
of debt, and you have to know what the market is, what the costs are for ships. In other words, you have to make a video.
Yep.
So you can't just go for it because they're going to pay you 8%, but where does that number come from? That's why when we make a presentation, what I call a deal diligence package, we include everything as if it were for a bank. What are my hard costs? What is my experience? What are my soft costs? What is the cost per unit sold? What has been the track record so far? So when you have that information, what you're saying is it's not that they're bad deals, but you do have to do a bit of due diligence. You have to go to the dealer, open the hood, check the engine, make sure it's good, check the tires. You have to kick the tires. And that's what the article Playing with Fire says. Very good article. And
the investor Fede, who is considering this type of alternative, this type of investment instrument, it's also very important to recognize that that's why, and let me make a parenthesis here, that's why this is an instrument for what they call accredited investors or qualified purchasers according to regulations here in the United States. Because these are instruments that often have their limitations in terms of capital, and because simply put, in real estate funds, the capital must be deployed in the asset. It's important to note that the dollar invested in the fund is not sitting in a bank account that we can transfer. The invested dollar is in concrete and wood. So that's important. The same thing happens with private equity funds or private credit funds. private capital, private credit, it's very important. They have the capital deployed in their strategies. Those who are dedicated to credit, what do? They lend the money out. Therefore, if the money is loaned to a company, it's not so easy or simple for that manager to pull the money back out in order to fulfill a redemption. That's very important. So you have to understand that many of these strategies, which are often active because of their returns, they don't necessarily qualify under what the investor is looking for. If the investor is looking for liquidity, if the investor is looking for access to their money, you have to very carefully evaluate the strategy that will be used in order to choose the right one.
And what about the type of structure? What is the risk mitigation? What happens if the values really go down? What is the loan to value of the collateral versus what I'm going to invest? Where does the dividend come from based on the coverage? All of that needs to be thoroughly addressed. If the representative or sponsor doesn't provide it, you should ask, and the sponsor should make it available. At least with us, you don't have to ask. I'm usually proactive, and I tell you exactly how things are. And especially in the agreement where the investor is given first position. That's not what this article mentions. It has nothing to do with that. This article is mainly aimed at many products that are done privately. Placements where sometimes everything is based on pro forma statements without much track record, and then they offer very high types of dividends, and that's what can create a series of situations of overvaluation or overconfidence. So I'm seeing several things. This is not 2008 by no means. These are totally different dynamics, but there are indeed some changes happening that the market practically doesn't have. We have to mention it. And lastly, I think that next month's topic, we're going to talk a little about taxes. We're going to discuss alternative structures that pay a fixed return but are backed by collateral from already completed properties with rental income, and that can also be used under Act 60. We'll review what Act 60 is, and also that there are the IRAs, which now have an increased percentage that a person can contribute to the option. It would be good to talk in that episode specifically about the options that exist in the United States and in Puerto Rico,
to be able to serve the audience we have in both territories.
And the announcement that now we are on a new platform where the information will be accessed, I think that's it. Thank you.
Yes, you can tune in to us on Apple Music, on Apple Podcasts or Apple Music, but in the podcast section, and currently on Spotify as well. So share if you think this is information you'd like to have. Like and subscribe so you receive the content every time we record. And
this has been our policy since we did it on the radio back in 2017 to 2018, when we started this idea of bringing a different, new, educational and objective concept with trust as the main focus and analysis first, before promoting any kind of structure or sponsorship. If you notice, we have been very consistent throughout these 56 episodes and during the 7 years we were on the radio. So our direction remains the same. We would really like you to give us your feedback, or what is called retroalimentación in Spanish. That is the definition of feedback. What things would you also like to comment on that concern you? These are the things. It may be that right now there are a lot of young people dealing with the situation of high rents, extremely high rents, not knowing what to do, how to fix their credit. That's difficult, that's complicated. Well, the idea is to tell you, no, it's not complicated. This is a process. You do step 1, 2, 3. But in general terms, to talk a little about those circumstances, to use topics where we can help you in this
of impact. Well, thanks, Ferdinand. See you later. See you in the next episode of Game
Financial. If they let us talk here for an hour and a half, well, we're not going to delete it. We're going to break into little pieces.
Until next time.
My name is Ferdinand Ruano. And
I'm Jose Crespi.
We are the hosts of Financial Game Special Edition. Interesting, objective, and educational material.
Listen to us on Financial Game Special Edition.